I'm J.G. Michael, and this is Parallax Views. This edition of Parallax Views is brought to you by the $10 and above tier supporters of Parallax Views on Patreon. So, with that in mind, producers credit shoutouts to Galen, Matt, Gunnar, Mark, Simon, Alexander, Catherine, G, Tilo, Emilia, Jeremy, Jeff, John, Bert, Brian, Elliot, Michael, Brace, James, Nick, Mersham, Galen, Arlen, Bo, Christopher, Michael, Gigadelic Media, Chance, Chase, Dan, Big Bob, David H, Y. Kellerman, Sadeed 13, Kathleen, David, Ava, Bob, The West Bank Robbery Podcast, Jamie, Enoch, Gary, Max, Ishtofer, James, Martin, Matthew Ho, Brian, Nobody, Thomas, and Dano. And now on to the show. Hey there, Parallax Views listeners. Before we begin this edition of the program, I gotta tell you that I still need your support on Patreon at patreon.com/parallaxviews. As you know, I am currently without an advertiser, so I need you, the listener, to support this show on Patreon with a monthly donation. Very important at this time. I don't like to beg for money, but I am trying to do a fundraising effort of sorts in the next few months to keep this show afloat. So, patreon.com/parallaxviews. One more time, that's patreon.com/parallaxviews. Now, with that out of the way, we've got a spectacular show for you. A show about accusations of a software company and corporate landlords colluding together in an algorithmic price-fixing scheme that amounts to a criminal conspiracy that is artificially jacking up prices on the rental housing market. We'll be talking about the RealPage scandal with Lee Hepner of the American Economic Liberties Project. And boy, this one is a doozy. We'll not only be talking about RealPage, but also what The Atlantic recently called the AI Price Fixing Dystopia, the Google antitrust lawsuit, which saw a judge declare that Google is a monopolist. What does that mean? We'll discuss that in the course of our conversation, along with much, much more. So, with that being said, let's get right to it with Lee Hepner. Welcome to Parallax Views, a guest that I'm very, very happy to be speaking with. Lee Hepner is a California-based antitrust lawyer and senior legal counsel for the American Economic Liberties Project. And we're going to be talking about a case that I've been meaning to cover on this show, RealPage, a company that's being accused of essentially algorithmic price fixing. How are you doing, Lee?
I'm doing great. I'm happy to be here. Thanks so much for having me.
I'm really, really glad we could get you on because you've been doing a lot of work on this RealPage case and also on this Google antitrust case. But let's get into it. What exactly is RealPage if people haven't been following the news? What is this company?
Yeah, so, RealPage, as far as we know, is a company that offers services to landlords, property management companies, that, covers any range of property management functions. I'm not sure we know the full scope of what we do, but the reason why we talk about RealPage is because they offer a piece of software that provides revenue management services to landlords. And what this software does is it collects information. It collects really fine-grained information from corporate landlords, typically landlords, property owners of larger multifamily housing buildings. And it collects data like number of units, unit size, rents, layouts, this very kind of granular data. And it collects this non-public data from these competing landlords, combines it in this software, and then spits back to the landlords recommendations on how much to charge for rent. We are also aware that they may be making recommendations about how many units to leave vacant or whether to renew leases and other lease terms. And the effect of this is to deprive this housing market of fair competition, particularly around the setting of rents. And that's my kind of long way of getting to the effect of this. And what RealPage does is it holds out its software as a tool for allowing corporate landlords to make a lot more money off of their buildings, to maximize the rents that they can charge, to optimize the level of vacancies in a large multifamily housing buildings, and to artificially constrain supply so that they can charge more rent on the balance of those units. And in the middle of a housing crisis that is sweeping the country and has embroiled low-income people, renters, service industry workers, nurses, firefighters, teachers for the past couple of decades, if not longer, this is really troubling that you have this piece of software being held out to facilitate what is essentially a cartel in the rental housing market. And so that's why it's attracted a lot of attention and a lot of regulatory scrutiny.
So I want to talk, when did this start becoming a problem? And I guess RealPage isn't the only company that has come up when it comes to this. I believe there's another one in Atlanta.
There's a company called Yardi, which provides similar services, similar rent management software. As far as we know from the complaints that are, compiling all of these facts, this has probably been going on for the better part of a decade, specifically in the multifamily rental housing industry. Of course, as you and I know, price fixing schemes are as old as time, and they have always been, I think it was Scalia who once called them a supreme evil of antitrust. And, our antitrust law, the Sherman Act, that's where all these cases are being brought, is over a century old. It's 130 years old. And price fixing has always been illegal. So what we're really talking about here is the advent of this new kind of software-enabled price fixing and the complications that brings to enforcing against, the traditional evil of two guys sitting in a smoky room, shaking hands and agreeing to set a price on how to, transport coal across the country. It's a different time and a different tool, but the same concept.
Yeah, the reason I asked about that this has been going on for a decade, I think there is a difference if you look at pre-2016 and post-2016, because historically, when vacancy rates increase, the rents are supposed to decrease. But since this software has come about, the opposite is happening.
Right. Yeah, and it really is that kind of Econ 101 supply and demand kind of way of thinking about this. If supply increases, vacant units are on the market, you expect rents to come down. Exactly. And so pre-2016, you see this happening, and you see these charts from the complaint, which are really wonderful to look at. They're my favorite thing to show people because as vacancy increases, you see rents coming down. And that makes sense. That's what you would expect from a healthy market. And then come 2016, when you start seeing the entrenchment of these kind of complex and widespread price fixing schemes, you start seeing vacancy increases, but also rents start increasing as well. And that is so counterintuitive that you would have more supply and rents increasing at the same time. And it's really actually an existential threat to our efforts to solve the housing crisis more broadly. There's obviously been a big push. President Biden, has announced an initiative to build more housing. I think he said 2 million units during my term or something. there's no point in building that new supply if the rents aren't coming down accordingly. The promise of new supply, of new housing supply coming on the market is really undermined when you are building housing into a cartel that is only concerned with raising rents and really, lining the pockets of investors.
So I feel like, and I know your colleague Matthew Stoller has talked about this, antitrust is only just beginning to come into focus again, thanks to people like Lina and Jonathan Kanter. And I think there's a portion of the American public that may not be aware of how important antitrust is, or they may be confused when you talk about cartels. They've heard the term, but maybe you can explain, why is this push for more antitrust probes so important right now?
Yeah, it's a great question, and undoubtedly, Lina Khan, chair of the Federal Trade Commission, Jonathan Kanter, head of the Justice Department Antitrust Division, Rohit Chopra, director of the Consumer Financial Protection Bureau, Jennifer Abruzzo, head of the National Labor Relations Board. There is a really exciting whole of government approach that we've seen over the past 4 years. The National Economic Council and members of that body have also been really engaged in transforming the way that we think about antitrust in recent years. But that's also built on research that dates back, 10 years, 15 years, 20 years, where we see that in the past quarter century, that 75% of industries across the American economy have undergone some significant amount of contraction and consolidation of market power. And the real reason that matters is because that market power creates problems for consumers and for working people trying to afford food on their table. If we're just limiting, our conversation to price fixing, for instance, we're talking about price fixing in the rental housing market, but price fixing is also a problem in food production. And you see another company, AgriStats, facilitating collusion, a cartel, whatever you want to call it, a price fixing scheme among producers of poultry and potentially other food staples and raising prices on consumers. And that is the problem of market concentration, is that it removes competition between competitors on price. That brings price down, it brings quality up, and those are the things that really benefit everyday, living Americans in this country.
Right. And with what's happening now, the American consumer is, I mean, more or less getting stiffed because there isn't that competition.
Yeah, exactly. And the larger antitrust project, of course, is trying to spark that healthy competition, is to restore fairness to our economy. I think fairness is a word that we use a lot because it does have legal significance, but it also has an emotional resonance to it. We fundamentally want a fair economy, and I personally think that it's antitrust's role to ensure the fairness of our economy and to rid the economy of scam behavior, of price fixing schemes and beyond.
So you were recently featured, you were interviewed for a piece in The Atlantic entitled, "We're Entering an AI Price Fixing Dystopia." And that leads me back to something you said earlier, which is we've always had price fixing, but it seems like we may be in new territory now with AI price fixing, algorithmic price fixing, whatever we want to call it. How is this different than previous problems we've faced with price fixing in the past?
Yeah, and it goes back to that example of what price fixing used to be, or how we used to think of price fixing. And it used to be, the three railroad barons getting together and deciding, we're going to charge this price to transport coal. And it's typically been more effective when you have like a smaller number of competitors, because there's that mutual accountability among the competitors and that enforceability of a price fixing scheme. So if three people decide we're going to charge $4 for a loaf of bread, or we're going to increase the margin on our loaf of bread by 8% next year, when it's three competitors, that is easier to enforce among the competitors. Enter the new era. where I think the advent and novelty and potential value of price fixing software is to facilitate these schemes across a much broader market, where there is more, at least the superficial veneer of competition. There are a lot more participants in the market. There are a lot of different building owners. So one thing is that the price fixing software is able to facilitate collusion across a much broader range of competitors. And they enforce it by kicking people out of the system if they don't comply. So it really is kind of mechanizing and automating the collusive scheme in the first place, and then also the enforcement of it. And it can do that much more broadly than our traditional price fixing scheme of yesteryear. There's another, kind of scary aspect of this, and this comes up in the Atlantic article. And I think Rohey Karma did a great job in that article and talked to a lot of really good people who have been leading some of the study on this, like Maurice Stucke. The ability of different pieces of software or of artificial intelligence to facilitate an agreement without the knowledge of the competitors themselves. And that is really kind of, if you want to talk about dystopia, that is kind of like the really bizarre thing, which is that, the agreement no longer necessitates human intervention to rid a market of competition, to agree to fix prices, or to agree to degrade quality, or to agree to suppress wages across an industry. That no longer requires human intervention, because the machine can be weighted and designed to facilitate that agreement on its own. And that's where you get this kind of idea of an AI price fixing dystopia, is that the machine is agreeing to fix prices and to remove competition from the economy.
There was also, I saw you had it pinned on your Twitter. The FBI, I guess, raided this thing called Cortland Management in Atlanta. That's why I mentioned Atlanta earlier. How does that tie into the bigger picture with regards to all of this?
Yeah, so Cortland Management is a property management firm. I think they're based in Atlanta, but they have a presence, I believe, in markets across the country. There's been increasing scrutiny of RealPage, right? There's multi-district federal litigation in Tennessee that's a class action complaint. There is now a civil complaint out of the Washington, D.C. AG's office, the Attorney General's office. There's another complaint out of the Arizona Attorney General's office. And then we heard, when I posted that tweet thread, that was really breaking news, that the FBI had raided the offices of this Cortland Management, which is a defendant in some of the lawsuits that are alleging its participation in this rent fixing scheme. The interesting part about the FBI getting involved is that it suggests that there is an investigation of a criminal conspiracy here, and that criminal penalties could be on the table. So it's not just, a civil case that could, result in an injunction to dissolve the price fixing scheme. This is about, people going to jail. And it sends a different message when you realize that our antitrust laws are not just civil complaints. They're not just civil enforcement laws. They are also criminal laws. They also create criminal liability for the people who engage in this type of behavior. So that was kind of the interesting thing about the FBI's engagement. And now we're waiting for the Department of Justice, who are allegedly working on a complaint, according to a report in Politico, and that could come, any day now, hopefully sooner than later, to kind of keep that drumbeat going. But it'll be interesting to see what they turn up.
If you could gauge this, I know that antitrust is your area of interest, but I think overall, like, people really need to pay attention to what we see developing with this algorithmic or AI price fixing, because I mean, this is essentially jacking up the cost of rentals. It's artificially doing that. And to me, that's like one of the biggest scandals I could imagine in the past few years. I mean, this is huge.
Yeah. I think without a doubt, this is one of the most consequential conspiracies of our time, criminal conspiracies of our time. I think we're waiting to turn over all of the rocks to see just how vast the implications are. But everything that we're learning is more jaw-dropping than the thing before. And it's not just rental housing. Again, this is about the price of food. This is about the price of travel. The airline industry has been innovating on price for longer than just about any other. But across industries, these types of pricing practices present a really kind of existential crisis for fairness in our economy and prices and the predictability of price and the fairness of price and how people manage their pocketbooks. It really is of enormous magnitude. And we can talk too about all the different ways that prices are being manipulated. It's not just price fixing. It is the advent of personalized pricing. This notion that companies are now extracting personal information from you and, for instance, charging an individual a different price based on how much money is in their bank account or what their credit card balance is or where you are at what time of night or how low your battery is when you're trying to hail that Uber home. And so you see that price innovation is really a price crisis across our economy. And it's not just price fixing, it is personalized pricing, it is price discrimination, and all of these things fall under the broader umbrella of antitrust scrutiny.
Since you mentioned, food, airlines, how does the RealPage case fit into this bigger picture that you're getting to here?
Yeah, well, I think that there's been some warranted political momentum behind the RealPage case, precisely because housing costs are something that everybody can relate to. We're talking about rental housing, but there's also a case from earlier this year that dates back a few years against the National Association of Realtors, which was facilitating a price fixing scheme on the amount of the commissions that real estate brokers are charging in the home ownership industry. So I think you can zoom out like that, and RealPage is one example that is acutely affecting and very broadly affecting the rental housing industry. But this is happening all over the place. You zoom out, it's about housing ownership, it's about grocery prices, it's about airlines and travel and beyond.
In regards to remedies, what are there possible remedies for this kind of crisis we see ourselves in with regards to not just price fixing, but the other problems you mentioned that antitrust is trying to solve?
Yeah. I think that, it's funny because you ask somebody who's interested in antitrust at this phase of these cases, and we're concerned probably more with, what the liability looks like and proving that there's this wrong and enforcement of the law has become so challenging over time due to discrete decisions by the Supreme Court that have made it harder to bring a case against price fixing in the first place. So
was there any specific decisions the court made that?
Yeah, there's a case called Twombly that from 2006, 7 that really raised the barriers to pleading a case for price fixing. It requires that you kind of have a silver bullet proof of an agreement at the outset of the case. And that's often hard to intuit. And I think that heightening that barrier and requiring that upfront proof that competitors agreed with each other has probably facilitated the rise of software price fixing, which exploits that loophole because it's harder to determine where that agreement actually occurred. So I think Twombly is one opinion that has created a corporate price fixing loophole. And there's some policy efforts afoot to try to close that loophole and make it easier to bring these cases in the first place. And when you make it easier to enforce the law, by the way, it makes it harder to violate the law in the first place. And this is a way that we discuss, drafting laws all over the place. Is that if a law is enforceable, it will encourage compliance with the law. If a law is hard to enforce, then it is an inadequate deterrent to violating the law in the first place. I think that we can do a lot of work to kind of right size price fixing law and to close that really important loophole. But to your point, since we're in this situation and we're waiting for these cases to play out, I do think that, obviously the imperative is to dissolve the price fixing scheme in the first place, and just to rid the market of RealPage's anti-competitive price fixing conspiracy. Like that we can do too. And there are a lot of that's where the litigation is heading. There are a lot of legislative efforts to try to do that as well.
I don't know if you've heard about this. I'm assuming you have, but I know there's some developments happening in San Francisco with regards to this RealPage software, and I guess I don't know if it's passed yet, but a ban on revenue management software.
Yeah, so I'm joining you as it happens from San Francisco today. Breezy San Francisco. It's the middle of summer, and I've got my foot heater on and a jacket. But yeah, you're right. San Francisco did just take kind of an extraordinary first step and became the first city in the country to ban software price fixing algorithms in this rental market. They banned AI rent fixing. That's, San Francisco became the first city in the country to do so. Specifically, what they did is that they made it illegal for competing landlords or landlords, period, to share non-public, competitively sensitive data with a third party like RealPage that makes recommendations about rents or occupancy levels or other lease terms. So it really focuses in on the mechanics of the sharing of that non-public data in the first place. I think it's a really important piece of legislation. It should catch on like wildfire. There's another California allegory for you. But we're hoping that this regulatory mechanism spreads. We put out a memo encouraging state and local lawmakers across the country to do this, and I'm fingers crossed, hoping that we see progress in other jurisdictions soon.
I want to take this back to RealPage because I didn't ask this earlier. But when it comes to the data that you've looked at, the statistics and just reporting on this case of RealPage, what was the most shocking thing you discovered looking at all of this?
Oh gosh, the most shocking thing. I feel like my jaw drops every day. I think that I was shocked to see just how pervasive this is, and how quick the uptake was on this scheme and participation in this scheme. The market penetration of revenue management software is as high as 70% in some local markets. And let me just kind of bring it back to kind of a fundamental thing here, which is that you typically think that the cost of something to a consumer is, the cost to the company of creating that thing plus a little bit of margin. And that's what you're paying. That is what the price is. And how far we have drifted from that kind of basic conception of what a price is. And it's really scary to me that the price that we pay today is no longer the price of a good plus a little bit of margin so that the provider can get a little bit of profit, but it's based on how much you can afford to pay, the maximum price that you are able and willing to pay for a good. That is a fundamental shift in the way that we think about how money moves across our society. I mean, it is kind of like abdicating a lot of principles like public tax principles to the private sector, and it is really perverse. I think back to your question maybe about RealPage. I mean, here's a fact for you that not only is it raising prices, it is increasing eviction rates by double digits as well. I mean, you have.
I wanted to ask you about the eviction rates, so go on.
Yeah, you have like property managers in Arizona saying that, hey, ever since I started using RealPage, I'm able to increase the turnover of my units by 12%. And it's like that's actually that means you're evicting people. Like that turnover is a euphemism for eviction. And then that has real consequences too. I mean, in San Francisco, where we have a dire homelessness crisis, 70% of people who are homeless in San Francisco used to live and be housed in San Francisco. And that means that they were evicted from their homes for whatever reason it was. But that is the consequence. I mean, it really is kind of fundamental. I mean, can you draw the thread from RealPage's revenue management software to the homelessness crisis on our streets? And I think you can. And the implications for that are really, really, really vast.
Also, real quick, we're not talking small percentage increases when it comes to this kind of thing, are we? Because I think in Atlanta, where that Cortland management company was based, the rents increased, what, 56% since 2016. These are not small increases. Yeah.
They're not small increases, and RealPage itself says we can help you get double-digit percentage more on rent year over year. I mean, they're advertising this to their clients. It's part of their pitch. So yeah, these are not small increases in rent. And I think that there's a really good economic project underway to kind of really isolate all of the different variables contributing to rents and our housing crisis. But RealPage itself prides itself on its ability to maximize rents. And it really is a pernicious evil worth addressing.
So one thing I want to ask you, and this gets into the bigger picture, whether we're talking about RealPage or Google, I think some people have a lot of misconceptions about antitrust and the movement to push for more antitrust work, and the challenges to monopoly capitalism that we see Lina Khan and others pushing for. I see people say, oh, this is just about small businesses versus big businesses, which I don't think that's true, because I think consumers are affected by all of this as well. And I also think that people sometimes don't understand that all of what we're talking about, I really do think it transcends partisan lines. I think this should be a bipartisan issue, whether you're a Republican or a Democrat. Do you want to comment on those things? And also, what do you think some of the other misconceptions people may have about this antitrust? What do you think those misconceptions are?
There are a lot of people will kind of talk about what the purpose of the antitrust laws are, what they were back in 1889 when they were first talking about the Sherman Act, in 1890 when it passed, and 1911 when it the landmark case against Standard Oil was decided. And fundamentally, I think antitrust is a tool for ensuring opportunity in our economy. I mean, it is very basically about ensuring fairness of opportunity for new entrepreneurship, for innovation in our economy. And by virtue of that opportunity, you facilitate competition. You facilitate competition for consumers. When there's fair competition for to attract consumers to your business, that typically means you are innovating to improve the quality of your product. You are innovating to decrease the price of your product. You are innovating to offer a broader variety of goods and services. And it's fundamentally when you have monopolies in an economy or in any single industry, that's when all of that stops. You lose the competitive imperative to innovate and to improve and to evolve and to better society more broadly. It's easy for me to zoom out from something like, oh, this is software that facilitates price fixing, to this is fundamentally about how we structure our society and create a society that the economic terms and the social terms of living in this country are not dictated from the top down by powerful corporations, but that we have the tools in place to hold each other accountable horizontally and to build an economy from the bottom up that honors innovative spark, that honors creativity, that honors self-determination and and care actually for your neighbor. I mean, this is really about fundamentally freedom. This is about ensuring freedom and self-determination in our society. I mean, that's a very kind of abstract way of reverse engineering what antitrust is about to like a big platitude. But I think it's fundamentally easy to draw that line and to thread that needle. And it's the reason why I'm so passionate about this. I mean, everybody has their kind of single issue in the world, and I often tend to reverse engineer everything to, you know, if there weren't dominant corporations dictating the terms of our lives and our societal interactions, we would be able to solve a lot more problems in our society that transcend just the core economic terms that we're talking about.
I mentioned that this is, I think antitrust should be and challenging monopoly capital should be a bipartisan issue. And, we should remember, everyone should remember that, the Sherman Act, I believe, was used for trust busting by a Republican president, Teddy Roosevelt. So what do you say to people that, like if they're a Republican, and
Yeah.
they're against antitrust, or even I've known liberals that think, oh, you're too obsessive about antitrust. What do you want to say to people that are skeptical of these challenges being made to monopoly capital?
I mean, look, it is kind of funny, and I didn't address the bipartisanship question, but I think it's right that you do find healthy skepticism of the power of very large dominant corporations across the political spectrum. And it's not that like all Democrats agree that powerful corporations are bad. In fact, I'm from the San Francisco Bay Area where big tech, kind of has a stranglehold on a lot of policy making in our state. And part of that is just fear that like, we're going to kill the golden goose that fuels our tax base and our broader economy in California. So there is a lot of kind of like loyalty to bigness on the Democrat side of the aisle and certainly on the Republican side of the aisle. I mean, there's, certainly talk about economic populism on the right. And skepticism of Google and Facebook. There were laws in Texas and Florida last year that really went after big tech social media platforms for censoring and discriminating ostensibly against conservative speech. And although they weren't content specific laws, but let's not get too deep in the weeds there. But there is skepticism of the power of big tech in particular on the right. And you see, certain lawmakers on the right, whether it's Ken Buck or Mike Lee, or, even JD Vance out there talking about the good work of Lina Khan. And people are free to, determine for their own purposes, whether that's, genuine support for these issues. But I think it's interesting that you do see, support for the antitrust framework on both sides of the aisle. And I think that's a really positive opportunity to kind of realign our politics around fairness in our economy and see what flows from that.
I'm curious. I've been watching the news lately and seeing, Reid Hoffman saying that after making a donation to the Harris campaign, saying, "Oh, Lina Khan needs to be removed." I was seeing Jim Cramer complaining about the court ruling that Google is a monopoly, saying, "Oh, this is horrible. The populists are going to take down these big businesses, and that'll raise prices." I see a lot of propaganda, in other words, is what I would call it. What do you think? How do you counter the propaganda? Like when you hear a Jim Cramer saying, "Well, bigger is better," and it leads to better prices for consumers. How do you respond to the propaganda, and how can we counter that propaganda better?
Yeah, I mean, look, the funny thing is the Reid Hoffman thing, it was kind of a galvanizing moment. I mean, it was almost a gift to to people who saw that happening and identified a very acute and specific threat to the work that that so many of us have been doing for the past several years to invigorate the enforcement of our antitrust laws and our fair competition laws. So, that was a funny little gift in a way, because he made it very explicit what he was looking for. Um, but the other thing is that this project is popular. If you poll people across the political spectrum, um, there is enormous skepticism of corporate power. People understand that dominant corporations and monopolies in our society contribute to things like higher prices and degraded quality. People don't want corporations making decisions about their everyday lives and interactions. So this is actually a really popular movement that I think we need to just kind of reinforce. And the way to do that is, I think it's really returning to grassroots basics. And realizing that in order to build a popular movement, you can't just tinker with the policies in the ivory towers of Washington, D.C. or your state capital. You really need to build a cross-sectional grassroots movement that brings together advocates for, consumer fairness, labor advocates, small business advocates, and to build that kind of popular support for this kind of work.
Yeah, and I was going to say, it sounds like a lot of the rants that you'll hear against Lina Khan, just the facts are not on the side of the people attacking. I think the facts are on the side of people like yourself, Lina Khan, Jonathan Kanter, and I think that there is this denial amongst some that support Reid Hoffman and such figures. There's just this denial of what's been called greedflation.
Yeah.
And how much inflation really is in a lot of ways being caused by things like price fixing. Can you speak to that and the concept of greedflation?
Yeah, I mean, look, there were people who were far more invested in that debate than I was, but I mean, this notion that a lot of the inflation that we experienced during the pandemic, the record 8% inflation from a couple of years ago, the persistent kind of inflation over the past few years, has actually just been driven by corporations with market power who recognize an opportunity to turn up their pricing knob, and that, Google has a pricing knob that it turns up on advertisers, but, it's like you can actually just increase price because you have market power. And where there is a lack of competition in our economy, there's no check on your ability to do so. So, that's what gives rise to this notion of greedflation, which is that, really, inflated prices across our economy have been driven by corporations with the power to turn the price knob up. And that's really the problem. You're right, though. Like, it's funny, like when you compare like the two sides of this debate, I mean, I like to think of myself as a somewhat altruistic person who has the best interests. I like to be kind of wed to my ideology, and they're wed to their ideology too. The difference is, they have access to a platform where, Wall Street barons and venture capitalists are traveling to the Arc de Triomphe in Paris to give talks during the Olympics about, the threat of Lina Khan to our economy, or, the need for more merger and acquisition deals to happen. And it's like the question becomes equally about who has access to the ultimate decision makers. Is it, this broad grassroots popular movement, or is it these incredibly powerful, wealthy folks who can donate, $10 million one day and go on TV to announce, their personal policy preferences?
Before we start wrapping up, just a few more things here. So, with that judge just declared, Google is a monopoly. It's a monopolist.
Yeah.
It's violating anti-monopoly laws. What is the significance of that case?
Wow. I mean, it is a hugely important and historical case. I mean, just to back up, a week ago yesterday, I guess it's Wednesday now, on August 5th, kind of out of nowhere, because we weren't expecting, didn't know when this decision was going to drop, but Judge Mehta, a federal judge in the District of Columbia District Court, determined that Google has a monopoly. Google is a monopoly over search, online search, and search text advertising, which is the market for how advertisers reach users based on the search queries that they put in their web browser. It is a monumental decision, and it's just that word monumental. Jonathan Kanter, head of the antitrust division at the Justice Department yesterday, was on TV saying that this is part of the Mount Rushmore of big antitrust cases. You have Standard Oil, you have AT&T, you have Microsoft from the late millennium, turn of the millennium, and now you have 25 years later this monumental decision declaring Google a monopoly, and the implications of that are enormous. I mean, Google has more control over the flow of information in our society than just about any other company you can imagine. I mean, think about that. This is fundamentally about how information flows across our society. And Google's control over that over the past several decades has been achieved through anti-competitive means. They've achieved that position unfairly and in violation of the law. And now we get to decide, the judge gets to decide what to do about that. And it could fundamentally change the way that information flows across our society. And we should expect nothing less than a fundamental shift in that market.
So I know you can't look into a crystal ball, but what conceivably could happen next with regards to this Google case?
So on August 5th, the judge issued this decision that closed the liability phase. Now we head into the remedies phase, which is the what do we do about it? What penalty meets the crime? And that could take some time procedurally over the next several months. We'll figure out exactly how to engage in that. But the remedies that are on the table are very, broad. The court has really broad discretion to issue remedies that do a few things. First of all, you need to deprive Google of the ill-gotten gains of its monopoly. So that could be Google's scale and the contracts that it has entered into with entities like Apple, which Google pays Apple $20 billion a year to maintain a default exclusive search position on every iPhone in the world. So you could see an end to exclusionary agreements. You could see a splitting up of certain business lines under Google itself. You could see Android being split off of Google. You could see the Chrome web browser being split off of Google and spun off into their own corporations. And then fundamentally, we should also ask what this means for the next iteration of of search, which is artificial intelligence. And how do we prevent Google from grafting its search monopoly into this next phase? And being at this inflection point, how do we make sure that we are preserving competition and opening up competition in that next phase?
I've kind of had trouble at times explaining to, say, relatives or just lay people, and I myself am kind of a lay person on this. I defer to you, the expert, but sometimes when you talk about, say, Google and antitrust, people will say, well, why are you picking on Google? Isn't it it's just providing the best search engine? And I'm like, well, that may or may not be true, but that's not the point. So
Yeah.
I wanted you to talk about maybe the common arguments you hear and why they miss the point, because I really do think, oh, well, Google's such a great search engine. Well, that's not what the antitrust suit is about. So can you speak to
Yeah.
that?
Sure. I mean, look, I use Google search. I'm, just like the 95% of other, Americans who, rely on Google search. And that really is how much of the market that Google controls, particularly on mobile devices, is 95% of the market. Google search works. Sure, fine. I've been frustrated with Google, and I think other people have kind of been frustrated that Google doesn't necessarily provide the right response sometimes, or You see, in your web browser, an increasing number of sponsored advertisements that are indistinguishable from what we call organic search results that might provide the actual answer. So there are ways that Google search has actually gotten worse too. But whether Google is good or not is, to your point, a little bit aside the point. And the point here is that it has foreclosed the ability of rivals, of other businesses to come into this market and innovate and create new products and reach consumers. And that was really what they were found liable for in this case, was shutting off access to markets for other potential competitors. And other people have tried to make search engines. I mean, you talk about a search engine called Neva, which nobody's heard of. Nobody's heard of Neva, but they invented, I think it was a former Google engineer who started this company, and they invented a new search engine that was different than Google, and which, incorporated certain artificial intelligence features to create a better search engine. And they weren't able to enter the market because of Google's dominating share. So I think, what this really is about is competition itself. And returning to that notion that antitrust protects competition on the merits. And Google has not been winning its market share through competition on the merits just by having a better search engine. It's preserved its monopoly through all of these exclusive agreements that prevent new things from happening. When we broke up, we didn't break up, but when there was a remedy in the Microsoft case 25 years ago, that unleashed a new era of innovation that arguably gave Google its legs, its ability to innovate. 25 years before that, it was AT&T. When you break up, the long distance carriers from the local networks, you start getting things like the internet. So I think what we're trying to do here, and what we should be ambitiously searching for, is how to make sure that that next era of innovation, which we can't predict, is allowed to occur, and that the next era of search and information flow in our society benefits from full-throated competition and innovation.
I just had one or two more questions. The first is,
Sure.
and I hope this isn't an odd question, but are there people in the tech world, or even, people that are rather wealthy, that are starting to support the cause of anti-monopolism? Because I noticed one of the big people that is really pushing for antitrust, anti-monopoly work is Jeremy Stoppelman of Yelp. He's the
Yelp, yeah.
CEO of Yelp. Yeah. So I feel like there are people, from tech world and wealthy people that are starting to get on board with that. Do you think that's the case? Are there more Jeremy Stoppelmans out there?
Absolutely. I mean, absolutely. And I think that, there's been a growing movement among, small tech, as compared to big tech, but, new small tech entrepreneurs who also want the opportunity to innovate. I mean, and to create their own products, and to know that they will be rewarded for creating something cool and innovative and new and beneficial. And I think that that's actually an impulse and an area of support that fits very well with the antitrust project. I think we should really, really, really strive for that mythology of two people sitting in their garage creating the next Google or the next Apple to manifest again. But the only way that that happens is if you break down the barriers to market entry that are presented by big tech monopolies like Google and Facebook and Amazon and Microsoft. You have to break down those barriers to entry in order for those small tech innovators to have a chance. So I do think you start to see a lot of kind of ground up support from people who just want to have a chance.
Well, hey, Lee Hepner, I want to thank you again for coming on Parallax Views. How can my listeners keep up with your work?
We have a website. We're at economicliberties.us. We're the American Economic Liberties Project. We have email addresses. Many of my colleagues are writing all the time and trying to create really a two-way conversation here. I think we really need to learn from each other and what people are experiencing. So if your listeners have thoughts about this and want to reach out, I'm a sponge, and we're always trying to learn more.
Thank you so much for coming on Parallax Views.
My absolute pleasure. Thank you.
Well, that does it for this edition of Parallax Views. As always, if you can, support me on Patreon at patreon.com. I'm making a big push here because I do need that Patreon support to keep this show going. So, patreon.com/Parallax Views. Support me there. And with that being said, until next time, you've been listening to Parallax Views with Parallax Views to Parallax Views with Parallax Views.
The way out is not simply to say, don't do it, just to prohibit. If nothing else, if we don't do it, others will be doing it like crazy. So, we have to confront the problem. But no, basically, I know of the great anxieties, problems, new forms of control, but it's also new forms of freedom. This is why I always emphasize that internet and all this new digital stuff, it's a very ambiguous phenomenon, but it's the field of struggle. New forms of enslavement, but at the same time, new incredible forms of freedom. We have to accept the fight with no nostalgia for old, allegedly more authentic communities or whatever. I'm not afraid. I'm not afraid. I'm not afraid. I'm not afraid.